Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. Now, let's begin with this week's outlook. Here is the quarterly chart of EURUSD. As shown here, I see this as a breakout above the long-term downtrend. The key high is around 1.2320. Unless price breaks above this level, we cannot confirm a clear shift into a long-term uptrend. For now, I consider the quarterly chart to be in a broad trendless state between current levels and 1.2320. Next, let's move to the monthly chart. Here too, the downtrend seen on the quarterly chart has been broken to the upside. On this timeframe, the notable high is the green zone around 1.22 to 1.25, and the notable low is the blue zone around 1.09 to 1.12. I consider the market to be range-bound, or trendless, within this zone. If price clearly breaks out of either side, I will expect the start of a new trend. Now let's look at the weekly chart. Here, price can be seen within an ascending channel. Currently, it is touching the upper boundary of the channel and consolidating. If price breaks above the recent high and pushes through the channel top, it could head toward the 1.22 to 1.25 area on the monthly chart. However, at the weekly level, the major level to watch is around 1.12, marked by this horizontal line. A pullback to this area should be kept in mind. If price only pulls back to this level, another rally could follow. But if price closes below it, we could see a corrective decline within the channel, with the lower boundary, around 1.05, serving as the next key area. On the daily chart, the uptrend that began at the start of 2025 is still in place. Recently, we can draw this ascending trend line. Price broke above the purple zone around 1.18, which had acted as resistance, but then pulled back and is now testing below the trend line. This is a situation where careful position sizing is important. If price can firmly break above the recent high near 1.192, I would again consider a bullish outlook. However, since the market is already at the upper boundary of the weekly channel, I think this is less a time to add aggressively to longs, and more a time to look for profit-taking points on existing positions. At the same time, the 1.159 area is functioning as support and resistance. If price breaks below this level, caution is needed from a bullish perspective. In summary, this is not an easy place to buy aggressively. But as always, let's face the market with discipline, and not get swayed by every small move during the week. Thank you for watching today's analysis. If you found it helpful, please subscribe and hit the bell for updates. All charts are powered by TradingView. You'll find my link in the description. See you in the next Outlook.